Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news of rapidly building economic consequences from the latest Chinese health scare. Yesterday, the China coronavirus threat spooked Asian equity markets further, with the Shanghai index down a whopping 2.8%. Hong Kong was down 1.5% and Tokyo was down 1%. That carried on to European markets, with most falling by 0.9% in overnight sessions that have just ended. And Wall Street is realising how dependent it is on a healthy Chinese economy, with the S&P 500 currently down 0.3% and falling. Some disappointing earnings aren't helping Wall Street either. At the epicentre of the virus outbreak, Wuhan, an 11 million person city, is in lockdown with quarantine, public transport is closed, and the Spring Festival travel plans of millions are in disarray. The virus now has been identified in 5 overseas locations: Thailand, Japan, South Korea, the US, and now Singapore. In New York, there was another very big Fed repo transaction overnight, 2 in fact, together amounting to more than $75 billion. But because of the expiry of earlier actions, the net was a pullback in liquidity support. A Chinese company has scooped up a huge stockpile of rare and critical tech minerals for volumes far greater than the annual mined output of many miners. The first ECB monetary policy meeting of 2020 has kept policy rates on hold, as expected. That means that their zero and negative rates continue, and they will keep on adding €20 billion per month in their QE program. The ECB is to review its mission with broad scrutiny of their objectives and policy tools. And separately, the BIS says climate change could spark the next financial crisis. The first survey of consumer sentiment in Europe was expected to show an improvement, being not as negative. But in fact, there was no change to the net negative levels at the end of 2019. In Australia, their unemployment rate fell to 5.1% seasonally adjusted, taking pressure off the RBA to cut interest rates when it meets next on February the 4th. The Aussie dollar rose on the news. Full-time jobs were unchanged in December from November, but part-time jobs rose by 29,000. The US Treasury 10-year yield is again softer today at just under 1.72%, and that is a notable 5 basis points fall, large in the world of benchmark bonds. Gold is up $7 today to $1,564 an ounce, and US oil prices are down sharply again today to just over $55 a barrel, while the Brent benchmark is lower at just under $62 a barrel. Over the past 3 days, the crude oil price has fallen more than 5% on demand fears. And the Kiwi dollar is a little softer today as the greenback rises. It's now just on 65.8 US cents. On the cross rates were unchanged at 96.4 Aussie cents, and against the euro marginally firmer at 59.6 euro cents. That leaves our trade rated index at just on 71.1. And Bitcoin is much lower after yesterday afternoon's sharp drop, now at $8,322, and that's a 3.8% fall. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.